Hello friends, I've come back with one more video. So in this video, we will look at cash management, SIP, and Darvas Box. So what exactly is a cash management? So whenever you want to buy any stocks or REIT or INVIT, you need to have some amount of money from which you will buy, and then some amount of money where you will allocate if there is an additional amount that you need to invest. So let's say you have 30 lakhs as on today, sorry, 30,000, let's take. Okay, 30 lakhs is a huge amount. Uh, then you should divide that by 10. That means you will make equal parts of 10, and then each time when you buy you have to invest 3000. So in 10 parts you are going to buy that one. So the reason why it is 10 parts, because at the end of 10th part or before that, whatever you have would have invested, that will reach to a point of 6% profit, and then you can come out of it. So if you have 60,000, you can look at buying two stocks or two REITs. Okay, how you can do that, I will try to show that. So if any amount that you have, you should divide that by 10, and then you can invest that amount for a particular stock buying at once. Okay, so there are I have taught you about how to find a good stock, and how to automate that using a Google sheet, and how to look at the different fundamental criterias. Okay, so in order to make money for us, we need to have a disciplined way of working. There are some strategies as I have listed here. One is the SIP. This you would have come across from many people, like you should do an SIP in mutual fund and so on. So that is the basic thing. Darvas Box, VWAP, RTV, shameless cloner, buy low, sell high, and then finally we end up in an ETF shop. Okay. So today I will cover about the SIP and the Darvas Box, how it can be utilized and how you can invest using this. To do this, you don't have to understand all the jargons of the graphs and other things. If you don't understand the graph also, it is okay. Without that you can invest and then you can make money. Okay, so SIP method is very simple. Here I am taking an example of embassy here. So I had told you that these are some of the REITs that you can use. Okay, what I have done here is a back testing I have done, starting with the data of Jan 2022 to Feb 24. Okay, so what I have shown here is every month you are trying to buy two stocks of this at a at the given price on certain date. Okay, every 17th or 18th I have bought this here, and I have also shown you what is the trade value and what is the charges that they are going to get. Okay, so there are certain charges like STT, and then transaction charges, stamp duty, and brokerage, and taxes for that one. And also there is a DP charges like 16 rupees. Okay, and I have also shown you on a monthly basis how much I am trying to accumulate here. Okay, so every month we are trying to put 1,000 rupees here as an SIP, and then we are trying to buy this one. Here I have not shown when we have sold, I have just shown a long term SIP here. Okay, so at the end of February 24, so with the current market price of 375, so value was around 29,000, and the profit if it was sold would have been 3,000. Okay, and also while you are trying to buy this REIT, so as I have mentioned, every 3 months there will be a dividend distribution, and whenever you hold those stocks, right, you will get the dividend. So apart from the stock appreciation, you would have also received 1659.91 rupees of dividend. Okay, this is one way of investing where you regularly put money in a certain REIT or INVIT and then make long term profit. So if you want to stop after a year or 6 months, you can stop and then you can put it on some other REIT or INVIT as we had shown in the last Google sheet. Okay, this is one method. There is another method called as Darvas Box. Okay, first let's try to understand. Whenever there are three types, stock will move. Either it can move from top to down, that is a downtrend that is happening, or it can move sideways. It doesn't move upward or downward. It just goes with maybe 100 to 110 or 105. It moves in the same way. So then we call it as a sideways movement. Okay, and then there is a upward movement. Okay, so Darvas box works very fine on a upward movement. What we will try to do in this is uh, okay, at every peak we will try to buy on a weekly basis. So this has to be done on a every Friday evening. So whenever the market closes, you have to open the certain stock, whatever you have identified, and then look at the last week's high data and then place an order, GTT order for that. So during the next week, if the price goes above this price, then your trigger will happen and then you will buy. So the next week again, you will identify the high and then put a trigger there. And then if it goes above that, then you will buy. So if it is coming down, your trigger will not work and then your amount will be safe as it is. Okay, let's try to understand how we can do this one. So here I'm giving an example of ITC here again. uh, we identified the capital as 30K, and then for each investment or each time or each week we identified 3K that we would be investing in this one. So what you need to do is every Friday evening you have to open the NSE and then search for that particular stock. In that you have to go to the historical data and then 1 week you have to identify. So the sheet directly shows what is the high price for that week and what is the low. We will identify the high price and then place a GTT order. Once whatever we have bought, if it crosses 6%, then we will make a profit out of that one. We will sell and then we'll make a profit. And again, in this profit, it is better you utilize your 50% of the profit for yourself for any of your household activities, and rest 50% you can reinvest here. So I'll show you the back test what I have done, and then I will show you how to place an order. Okay, so this is example of ITC again what I have taken here. I've done a back testing of this one. It's taking a bit time to open. Let's see. Okay, so here I have taken data from May 23. So what we will identify every week, right? So we'll identify the high price. So for this week, 433 was the high price. So we have ordered GTT for 433. If during the next week, if the price goes beyond this, then a buy will happen. So in this week, 433 was not reached, so there was no buy. Next week again on Friday, we identified that 432.45 is the high price, and then we ordered for 432.45. On 26th of May, the trigger happened. Oh, sorry, not 26th. It was on 24th of May. The trigger happened, and then we bought certain shares. So for 3,000 rupees, we bought 7 shares, and this was the profit required for us to sell it. Okay, so on the day when we bought, it was around the closing price, it was around minus 0.8%. Okay, So the next week again, we identified 444.75 as a high price. We ordered the GTT, and then the trigger happened the next day itself. And then again, seven more shares were bought. So total we have 14 shares. Okay. And then we also see that the profit is around 2.6%. So next week again, 446 was the high. We ordered for 446, but during that week, sorry, it was 452. Uh, During that week, there was no trade that happened, so nothing was there in our basket there. Next week again, we identified 446 as the GTT order price. The trigger happened on 14th of June, and then we again got seven more shares there. So likewise, if we continue, if we see that there is a profit that we have made of 6.4% on 5th of July. So this is how the GTT order works for a Darvas box. Okay. So now how do you find this data? Let me take you through that. So when you go to NSE, you will search for the particular stock. Here I'm searching for ITC here, and then you go to the historical data. 1 week you select and then click on filter. So when you do this, you will see that the high price is highlighted in green. So this data, this number you have to use for ordering the GTT on a Friday evening or Saturday or before Monday morning trade. Okay. So how do you do that? I'm just trying to show that on a Zerodha account, my account here. So here is the ITC which I have added in the watch list. If you want to add any data, you can search for ITC and then click on this. The stock will be added, and once the stock is added, we can click on these three buttons here, and then you see that there is a option called create GTT. So here you can order for that. So based on the amount that you are trying to allocate for this stock, you can identify how many stocks it would come and then place the order. So once you place the order, all the orders will be shown on the GTT here. So I have put certain orders for different companies out here. This is how it will be shown. So and it will also show you as an active since it has not yet triggered here. Okay. Hope you have understood the Davos box way of investing, and keep learning, keep sharing. Thank you very much.